23.60%. It means it has pulled back 23.6% of this previous C to D move. If it comes to 38.60, it means it has pulled back 38.60 of this previous C to D move. If it comes to 50, that means it has pulled back half, 50% of the previous C to D move. And the same thing applies if it comes to 61.8. It has pulled back 61.8 of this previous C to D move. If it comes to 78.6, it has made a pullback of 78.6 of this previous move. And if it comes back to C, we shall say it has made a pullback of 100%. So we are looking at shallow pullbacks versus deep. When the market is trending, we have price moves up, gives a pullback. It moves up, gives a pullback like this. Now, there are times when the market doesn't really pull back to give you these strong pullbacks, just like the way we illustrate them. At times, price can give you a high, pulls back small, goes up, pulls back again small, it goes up. So this, for the case of this, we shall say this is a shallow pullback, not like this one which is giving you a deep pullback. This one, we shall call it a deep pullback. The same applies to this. And then this one is a shallow pullback. This one, a shallow pullback. So let me write here, this is deep pullback. And then for these two, if you have this, and then this one, these are deep pullbacks, but for these two, we shall call them shallow pullbacks. These are shallow pullbacks. Shallow pullback. When this market is moving, in case of an uptrend, this is what you're going to see. You're going to see price when it makes this impulsive move. Let's say this is point A and price is moving going to point B. Then C, this point C, where price is going to leap to make another impulsive move. The stronger the pullback, the more price is likely to go higher. When price pulls back strongly, we also expect the impulsive move to be strong. But when price pulls back small, it gives you a shallow pullback. At times, these moves, they also tend to be not all that strong. They will be kind of weak. So this is point D. We say this pullback from B to C is a pullback. and this is a deep pullback. This is also a deep pullback. This is a shallow pullback. So the same thing applies to this. But in a downtrend, the same thing can also happen. You can have price moving, giving you impulsive moves, pullbacks, impulsive moves, pullbacks like this. This, because this move, it pulls back. If we say this is point A, and then we have point B here, we call this point C, and then this point D. So this, after this impulsive move to here, price pulls back, and then after this strong move to the downside, price gives you a pullback. So B to C and D to E, these points here, we shall call them pullbacks. If you remember in the previous class and videos, we talked about impulsive moves and pullback. So here we are identifying what shallow pullbacks are and what deep pullbacks are. So this one and this, these are called, we shall call them deep pullbacks. Deep pullbacks. Deep pullbacks. Pullbacks. These are deep pullbacks. So the whole thing is we are looking at shallow pullbacks versus deep pullbacks.
For the downtrend, the failure swing. How can we identify a failure swing here if we're now calling it a pullback?
No,
or is that something completely different?
that is something out of this.
Mm.
Okay, no, this is now we are identifying the kind of moves the market makes.
Mm.
When the market is trending in a downtrend, after this impulsive move, we want to learn how do you measure if this is a pullback and if this is a continuation, or how strong the pullback is likely to be. So here there's nothing like trend change. We are looking at pullbacks. This is an impulsive move and then this is a pullback. But how do you tell if it is a strong pullback or it is a weak pullback? If it is a shallow pullback or it is a deep pullback? Okay, this is a downtrend. We are saying this point B and C, D and E, they give you what we call this, we shall take it as a deep pullback. Because I will tell you why I call it a deep pullback. This was in an uptrend. We are saying this pullback is a deep pullback. Why? Because it is almost halfway the previous impulsive move. And the same thing applies to this. These are shallow pullbacks because the pullback is not even halfway of the previous move. Are we together?
Yes, yes.
So then this one, if we have this, these we shall call them shallow pullbacks ones.
Mm.
shallow pullbacks because they are not even covering half of the previous move. So we call them shallow pullbacks. Let me put here shallow pullback. So this shallow pullback, it's not, these pullbacks are very shallow, just like the way the name says. And in most cases, these shallow pullbacks do take place in strong trending markets, especially when the market has just broken out of a key level. They do take place. In a strong trending market, you will see there is one side which is dominating. If this is a downtrend and price drops, it is in a strong trading market. That means the sellers who are in, they are not allowing these buyers to push price back to at least halfway the previous impulsive move. So they are not allowing it. Each time price goes up a little bit, they sell it. Each time tries to buy up a little bit, they enter into sell. So that means there is a strong selling presence in the market. But they
can we also say when there is a lot of volume in the market, so then you see them?
And now the difference between volume comes in when during specific times. But when I talk of strong selling presence in the market, I mean the overall direction of the market is buying or selling. So volume is a different thing. Volume, when you bring in volume, it means maybe a move that happens during a session. But here, what I'm showing you can occur on the monthly time frame, can occur on the weekly time frame, it can occur on the daily time frame, it can occur on the 4-hour time frame. Let's go to the charts and I show you what I'm trying to mean. You see this price dropped. This was an impulsive move. Are you seeing this pullback? This one. This pullback.
That's a shallow pullback, right?
A shallow pullback because price did not pull back almost halfway of the previous.
Halfway.
Instead, it gave you a shallow pullback and it dropped down. You see this?
Another shallow pullback, yeah.
A drop here, a shallow pullback. Then you have also this one. Then you have
it's a
drop.
Deep.
You then have this. So you see this. These are shallow pullbacks. These ones, we shall say they are shallow, because they are not even going to cover halfway of the previous move. Then, if we consider this move and this, we can say this is a deep pullback. Consider this move and this is a deep pullback. The same applies to this. This is a shallow pullback. If you compare this move and this is a deep pullback. If you compare this move and this one, this is a deep pullback to this move. This is an impulsive move. This pullback is a deep pullback. You've seen it. That won't help. It's just that you took me far when I've not yet reached that level of showing you.
Sorry.
So I was saying,
okay,
when the price is moving, it will give you either shallow pullbacks or deep pullbacks.
Deep pullback, yeah. Okay.
or a downtrend, that's what it will do. So how do we measure these pullbacks to tell what is likely to happen? Or you can either use just your eyes to see, but we have this tool here. We have this tool. If you click here, you come to the Fibonacci, trend-based extension, and the rest. Are you seeing these ones? You pick this Fibonacci retracement. So this is the ruler itself. These levels can be in percentage, or you can have them, mine are in values, but others you will find them in percentage. Let's use percentage here. So we say when price is trending, it is going up or it is going down, we shall use this ruler to tell the direction of the market or to tell what price is doing. Anything below 50, we say price is at a discount, and anything above 50, we say price is expensive. I don't know if you are getting it.
No, I get it.
You get?
But then I have a question. Maybe we are heading there. You're still explaining the tool. Then my question would be, what's the best position to place the tool, like to draw the tool?
I'm coming to that.
Okay, then I'll keep quiet.
How we place this tool you're seeing is used in very many different ways. And because I'm teaching you the way I use it, it doesn't mean that that's how you'll also find another trader teaching you the same thing. You will find different traders use it in different ways, because we say this is just a tool. It has a lot of things in it. There are other values you're seeing here. There are some people who use these values, and when you put them on your chart, you will see they are there. But for us, based on the style of trading, we don't use it. We don't use those values. I'm using this one to show you how to tell whether the pullback is a shallow pullback or it is a deep pullback. So when price moves, we said price moves making higher highs, higher lows, higher highs, higher lows, and then higher highs. This is an impulsive move, and then this is a pullback. We are calling this as maybe point A. Point A. And if this is point B, this is B. Then if this is C, point C, then we have this as point D. Then this one we shall call it point E. Yeah, like this. I want you to pay maximum attention when it comes to this, because
I'm watching.
Different traders teaching things differently. But the way I'm teaching you this tool is how I use it to trade, not how another person uses it. Tomorrow you can come across someone else who is using it in a different way. Now we said, when price makes an impulsive move like this, and you see price is beginning to pull back or to correct itself, this is what we call a pullback. or you can call it a retracement. This is a retracement, this move. If you remember that video where we said this is an impulsive move, this is a pullback. Now, we say this is a pullback, or you can call it a correction, or you can call it a retracement. This is our retracement. So how do you tell if the retracement is a strong pullback or it is a shallow pullback? This is what you do. You get this instrument and you place it from this swing low to the swing high here. This is a swing low and this is a swing high. This is a swing low, a swing high, swing low, swing high. The lowest swing to the highest swing. Why? Because price is pulling back. We are measuring this pullback move. Now, you will find some other books or other traders who put it like this. They just put it like this. But for us, those who are learning from me, we don't use it in that way. Instead, this is what you do. This is how it looks like when you put it on the screen. So what you do is this. You click from this swing low here. This is where you start it from. And then you extend it like this. 100 should touch where the move started from. That is where 100 should touch. And the 0 should touch where the move stopped to start pulling back. Why? Because we are saying if the market is pulling back, this is a pullback here. At this point, it has not yet started pulling back. So if it pulls back to 23.60, that means it has pulled back 63.60 of this previous A to B move, of this previous impulsive move. If it pulls back to 38.60, it means it has made a pullback of 38.60 of this previous move. If it comes back to 50, we shall say it has pulled back 50% of this previous move. So if it pulls back to this 61.80, it means it has pulled back 61.8% of this previous A to B leg. And then if it comes to 78.6, it means it has made a pullback of 78.60 of this previous impulsive leg. Then when it comes to 100%, we shall say it has pulled back 100% of the previous impulsive move. So that's how we use the tool. I repeat, it is called a Fibonacci retracement. We are looking at the retracement. So you put this here and you wait for price to pull back. If price pulls back to, let's say, 23, it means it has pulled back, it has made a correction or a pullback of this previous A to B move by 23%. So the same thing applies to this D to E. From the swing low, 100 will be here. This is 100% because we are saying if our goal is to measure the retracement of this impulsive move that was made. How far is price going to retrace? Then this instrument, we attach it on the swing low. This is the swing low and this is the swing high. we say from the swing low, 100% touches the swing low and the 0% touches the high that was just made. So when you see price is beginning to pull back and you see a candle color change at D, price is beginning to pull back. So your goal is to wait for price to come and pull back. If price pulls back to 23.60%, it means it has pulled back 23.6% of this previous C to D move. If it comes to 38.60, it means it has pulled back 38.60 of this previous C to D move. If it comes to 50, that means it has pulled back half, 50% of the previous C to D move. And the same thing applies if it comes to 61.8. It has pulled back 61.8 of this previous C to D move. If it comes to 78.6, it has made a pullback of 78.6 of this previous move. And if it comes back to C, we shall say it has made a pullback of 100%. Are we together?
Yes.
Mark me correctly. I don't want you to get this 100%, then because different traders use it in different ways. So it will give you results based on the knowledge you have on it. Because some other traders use it differently, but because it is called a Fibonacci retracement, we are measuring the retracement based on the impulsive move it gave us. So when you look at this move, which area is it in? If you are to measure this one here, this pullback, this correction,
50%, half of the impulsive move, 50%.
Yeah, so okay, we shall say if you see 50, that means 50 and below. That means we have 50, we have 61, we have 78, we have 100. So there we say the market has given you a deep pullback. I want to compare these two charts. Let me call this X, and then I call this Y, then this is Z. Here point YZ is a shallow pullback. Shallow pullback. And then DE is a deep pullback. Pull back. Is it clear to you?
Yes.
Anything between 0 to 50, here we shall say price is a shallow pullback. And anything 50 to 100, that one is a deep pullback. Anything here and anything below here, this one we shall call it shallow pullback. Shallow pullback. And then anything between 50 and below, that one is called deep pullback. According to how we trade, not how other traders trade. Because I told you in trading, anything you learn, you backtest it. When you see what you have learned is not working for you, you dump it. You don't have to take everything. as long as you have data on what you are trading, it will work. So tomorrow, if you come across someone who is teaching how to use this in a different way, it doesn't mean that person doesn't know how to trade, but that is based on the data the person has gathered over time. So here we say anything above 50 here, we shall say this is a deep pullback, and anything here below 50, we say it is a shallow pullback. So when price moves, it comes and it pulls to 23, that is a shallow pullback. It comes to 38, shallow pullback. It comes to this shallow pullback. Then it comes to, it touches 50, that one is the start of a deep pullback. So here, maybe we expect price to go higher. If it can also come to 61.8, it can also come to, so this pullback, it comes as a result of the market repricing itself. Let's say the price of an asset moved, and then you see price is repricing itself. It forms this pullback. So if price pulls to 23 or 38.6, that one is called a shallow pullback. And if price comes to 50 or 61 or 78, those ones we call them deep pullbacks. Are you together?
Yes, it's clear.
Same thing applies to a downtrend. In a downtrend, you have price is moving, doing this. Then from the swing high to the swing low, you get the 100% should touch where price started from, because we are measuring this pullback based on this previous move. If it pulls back to 23, that means it is 23% of this previous leg. If it comes to 38.0, it is 38.6% pullback of this previous leg. When it comes to 50%, it has pulled back halfway of this previous move. And then when it comes to 61.8, it has pulled back 61.8 of this previous move. When price is selling, you don't chase it, because here price is dropping. It is expensive. So we want price to reprice itself to become cheaper, and then we get in to push it lower. So that's why we say wait for price to pull back at least halfway of the previous move, or any of these levels, you get the signal that says buy or sell, and then you get in. So for now, we are learning how to identify price, whether it is a strong pullback or whether it is a shallow pullback or it is a deep pullback. But this is what is going to happen most of the time. So you will either have a shallow pullback or you will have a deep pullback. As long as the market is trending, price can give you a pullback of 22, it can give you a pullback of 23%, and then it continues down. That means it pulled back by 23%. Then if it comes to 38, that is 38% pullback. If it comes to 50, half percent, deep pullback, deep pullback, deep pullback. Then if it comes to 100, that means price has pulled back 100% of the previous move. Let's go to the charts and try to identify shallow pullbacks and deep pullbacks. Now here you had this new breakout move. telling you price is in an uptrend. So what do? You put your tool and place it where the swing low is, and then you put it where the swing high is. When price begins to pull back, once you see a candle color change and price is beginning to pull back like this, your goal is to wait and see what is going to take place. Now here, if you can see here, we had a huge move to the upside, and then we had a pullback into the 23.60 level. Are you seeing? Then what happened? Price moved higher. The other which I want to tell you is this.
Yes, I'm getting you.
A pullback should at least have 3 candles of the opposite move. A pullback should have at least 3 candles. That is according to.
So a confirmed pullback should have at least 3 candles.
3 candles that are opposite the previous move. Because if you look at this market here, you had a candle color change, but you later on had the price continue up. Then you had 2 candles which are red. This is not enough to tell a pullback. This is what would tell us that this is a pullback. So if we had at least 3 candles, we would say that is a pullback. Because at times the market wants to pull back, but these guys are still not allowing price to correct itself. For a pullback to occur, you need to see these guys who loaded up positions here beginning to close some of their positions. Because price at that point will be expensive, as I said. I told you at this level, price becomes expensive. So you want to see them close their positions. The asset reprices itself, invites in new traders to push price higher. So this is a shallow pullback. I would say it is a shallow pullback because price came to this level, this one.
So the size of the candles doesn't matter?
The size of the candles do matter, but what I said is you don't need to be perfect. If you see 3 candles pulling back, that is a good. I'm on the daily time frame, 3 days of a pullback, they are okay. What we are doing, we are trying to see what we are learning. It is not magic, but we are trying to learn to see how to identify a good pullback and take action based on it. But it's not magic that you have to see 3 candles. A pullback can even have 10 candles. It can even have, but I'm saying, based on my experience, it should have at least 3, at least. Yes. So if you go to the lower time frame, this is a strong move. If you go to the 1 hour, 4 hour, you will go there and check. This is a very strong move. Let me do this because I'm on that daily time frame. So this is what happened. Now, if you remember those retail patterns, someone will be selling here because, but you're selling, price is pulling back. You see, if you remember internal structure. Now this is a pullback. Are you seeing how strong it is? The trend has not changed, but price is just pulling back. So in your mind, you know what is happening on the higher time frame. So once the market has priced itself, it continues higher. So the same thing applies to this. This is not enough to give us a pullback. This one. Are you seeing this? It's not enough to tell if this is a pullback.
Why is it not enough? Because of the 1 candle?
I told you the rule is what?
You have to see at least 3 candles.
So are there 3 candles here?
No, it's 1. So I was asking, what if it's 1 and it's a strong, let's say it's a strong bearish? That doesn't count.
Now, in trading, you set rules. You say, I will do this, I will not do this. So if your rule says at least 3 candles, you want to see a move that has at least 3 candles. Are we together?
Yes.
That means even if you see a pullback that has 2 candles, it's not qualified. The setup is invalid. Why? Because the market can rest. So the rule is a pullback should consist of at least 3 candles of the opposite direction. If this is an impulsive move, 2 candles are not enough to tell you it is a pullback, because this is a strong move. These 2 green candles cannot say this now price is repricing itself. These candles are not strong enough to tell you that this is something different. But we can say this is a strong move, and we can also bring our tool and say from 100% to this price pulls back. This is a deep pullback. Are you seeing this? So price pulls back into this level. 61, the zone between 50 and 61.8. So that one is a what?
A deep pullback.
This is a deep pullback. And if you remember very well the traits of an uptrend, we said in an uptrend you have more of green candles than the red candles. In a selling trend, that means a pullback acts as some sort of a short-term sell. So you have more of red candles than the green candles. So this is a pullback. A pullback does not mean you only have green candles, green candles, green candles, green candles, green candles, green candles. So here in trading, you set rules and tell yourself that if price doesn't come back to the level, or if price doesn't do this, I don't take a trade. So you wait for price to come into your zone. If you say price, I wait for price to come to 38, then I'll take a trade. The rules you set are the ones that are going to save you. So this is called a deep pullback. The same thing applies to this move. We don't have any pullback here. This can be taken as a pullback, but it's not strong enough. Reason being, according to market structure, this move is still one. Are you seeing? From here to here, this one is still one move. If you compare market structure, we have the swing low here, and then we have the swing high. Then we also have this swing low where price gives us a deep pullback. So our next swing high is here. We didn't have a candle that closed above this swing high. Let me put it. This is our swing high, swing high. So this is a swing high, and then this is a swing low. This is a swing low after the shallow pullback. This is where our swing low is, because we said we measure price based on the previous impulsive move. So we have our swing high, and then this is the swing low. So from swing low to swing high, you put there your net, then wait for price to come. This is a deep pullback.
But you said a few seconds ago that we do not measure this one because the points on the resistance level are the same. The points that the price hits the resistance level are the same. So we still measure it. We can still use the retracement tool.
I'm still here. Are you seeing? Let me remove other things. Maybe
I'm seeing
clearly. Let me remove them. I'm at this point. This is my low. I've marked it here. This where price started from to make this move up. This is my swing high, and then this is a pullback. So I'm trying to measure how far price will come from this swing high to swing low, I attach my Fibonacci retracement tool. Then when price gives me a candle color change, let's say you were in this trade from here to here, you got this candle color change. It's not enough for you to say price is reversing, because you have higher highs, higher low. Anything you see, even if you see a candle color change, it means it is going to facilitate a pullback. So you don't get scared and close your positions because you've seen one candle color change. So here you wait for price to pull back and then you wait for another move. Price can take long. It can even be 2 weeks. It can even be 3 weeks. But price moves doing its own things, as you have seen. Then when price goes and breaks above, so according to market structure, we say for price to fully break above here, because this level, this swing high level was strong enough. You see, it fought price from breaking up. So we don't call this a pullback. Why? Because price did not break above here. Do you see any candle close above here?
No, I don't see it.
So if you don't see
only the wicks.
If you don't see a candle close above, how do you tell if price has broken a level? If you want to see price has broken a level, you want to see a huge bullish momentum candle for the case of an uptrend. So you want to see such a candle which has broken through the level strong like this. You don't want to see these candles with wicks. We don't want to see a wick form when the market is trying to break above, because wicks tell us that there is rejection. So this swing high, there is a lot of rejection on this swing high. And that's why you see price was rejected for 1, 2, 3, 4, 5 days. One full week price tried to fight to break above, but being rejected. And then it's not until we had this candle. You see this candle here? This one. That candle. It's the one now that tells you something. You see this candle? That is the candle that tells you indeed a level has been broken. This candle is not strong enough to tell you the level is broken. This one is also not enough. We want to see a good candle with good shape closing above, just like the way this candle did. So now that tells you once we close above, then that means this becomes a swing low, this one. And if price goes and begins to pull back, we shall call this a swing high. Now here, that's why I said at times trading can be complicated once you don't apply other things, because now here I'm applying the knowledge of market structure. Are you getting me? So we said market structure, according to market structure, if this is our last level, this is the swing high, the market can do anything in between here. Anything. It can give you double tops, it can give you left head and right shoulder. But as long as we don't break below here, we are still bullish. So the only thing we are looking for is price to go higher. Even if the market comes and stays within this zone for a long period of time, it does whatever it wants to do, but it goes and breaks above. We shall say now we are in a continuous trend, because we don't want to see price. We want to see price respecting market structure. That's why market structure is very important. And if you have forgotten it, then you go back and reference on it. You watch the video, all those videos which are talking about market structure, because now we are reaching a level where we have to combine all those concepts. This one, because price has now broken above and it has given us a strong move. This is an uptrend because we have more of green candles than the red candles. And if you remember the traits of an uptrend, I taught you about that. So here you have price beginning to pull back. Are you seeing this?
This one's a confirmed pullback.
Where do you place your Fibonacci? It should be here. From the 100% should be here, and the 0 should be there.
Okay.
This becomes our swing low here. Let's mark it also. This is the swing low because we said you place 100% on the swing low, and then this will be our swing high. Are you seeing? This is the swing high. So we wait for price to pull back. Now you see price pulled back into this. You see this? This one was a shallow pullback. The first one. Are you seeing this?
Yeah, I see it.
What happened?
38.
And it did not even
close to 38.
It did not reach where the previous swing high was. This previous swing high. After pulling back into, this was a shallow pullback. Then price went and gave you some sort of a lower high. It then gave you lower low. But because we said, as long as we are between this swing low and then this swing high, we are bullish. The market can give you lower low, lower high, lower low, lower low. But as long as it doesn't break below and you see a candle closer below here, we are still bullish. Price can still turn and continue with the trend. So we are still bullish as long as we are in between this swing low and then this swing high. So your goal is to identify a pullback. And what happened? Price came into this level between 50 and 61.8%. So which pullback is that? Which pullback is this?
It's a dip.
It's
below 50.
Now, the reason why I said you need to have rules as a trader, I want you to see this. You see, Forex, those other traders who traded this as a pullback, this is what happened. Price came and it reversed as if it is going up, but later on it came back and took them up. Why? Because they traded this as a pullback. I'm not saying they didn't make money, they made money. But as a trader, you need rules that guide you. If the market doesn't give you what you want to see, you stay away from the trade. Because the other day I told you the market can give money to someone on Monday, it can give you money on Tuesday, it can give another one money on Wednesday based on the way the person trades. So this move here did not go above to break our swing high. It could be other reasons, but this move may be using the higher time frames, but if you were using the daily time frame to see this wouldn't qualify to be a pullback because we said price had not broken above here. So we can't give this to be a swing high. For me, I want to see a swing high where you have a candle breaking above. Those are rules. Those are my personal rules. I have to follow them. So if another one says for me, okay, there are other traders who will say for me, as long as price goes and breaks above, they see this week, that is still a high to them. But to me, and you as someone who is learning from me, we want to see a huge bullish momentum candle of this sort. Huge bullish momentum candle breaking the level. It should be strong enough to tell you that indeed the level is broken. This is the candle I want to see. Me, I wouldn't have validated this breakout because of until maybe if I had this candle, this one which I marked here. This one, I will trade it peacefully. I even go to bed and sleep. For 3 days, I will not open my chart because I know what the market is doing. This one is the one that gave us the right direction. So this is our swing high, and then this becomes our swing low, this one here. And then the same thing applies to this other move. Now, the lecture was on pullbacks and deep pullbacks, but I ended up again going into market structure, which is likely to confuse those who will watch the video in the future, but it is okay. The good thing we have those videos. So, what happened next? Are you seeing this candle?
The bearish candle.
Yes, the bullish.
Most bearish. Most bullish candle.
This one tells you price closed above this swing high. And I can respect this as...
Why is this one valid and the other ones are not valid?
Because price closed
because it's
above this swing high. It tells you that buyers indeed pushed price higher and closed above. Even if price pulled back, but it tells you that these buyers are strong and willing to push price higher. Are you seeing what happened?
And then we come back to my question. Remember my questions, that's the size of the candle matter. Oh, when you go to a lower time frame, it's above the swing high. Okay, I see it. Higher time, yeah.
This is...
Nee, wacht.
This is
it's still on a daily.
Above here. Why price pulls back and stays like this? There are other reasons. We are still learning. This is a strong swing high level. It has a lot of stop losses. The market does buying and selling. So there are a lot of sell orders here. Even if buyers are willing to push price higher, but if sellers are willing to open up positions, and if there are those who are willing to close their position, still price can reverse. But you see price reversed, and it... Now this, we can take this as our... See what happened. This time price came to 61. It was like reversing. It came and reversed from 78. Are you seeing? As I told you, for me, when price doesn't respect this level, it comes to this. I no longer treat it as a trend continuation. It tells me something based on experience that the market is now in a confused state. But as I said, this move, it moves and it can push price higher. But for me, I don't want to see price break and come up to this level, because all this is a choppy move and this is some sort of a downtrend. But we are respecting this swing high here based on the market structure and rules you set as a person, and say, for me, I will trade this. When I see this, I will not trade. So here you see these are wide swings, and then price and went broke above. So there are other things we look at while trading. We are still learning things that you base on to say, here I will close my positions, here I will get in, here I will get out. It's not only based on, but this gives you a clue on what is likely to happen next. So this is also a deep pullback. Deep pullback. So in the future, if you hear me refer to deep pullbacks and shallow pullbacks, this is it. So let's also look at a downtrend. Assuming we are considering this move here, we shall say from this swing high to swing low, we have a pullback into the 61.80 level and then price sold. We then had another one here where price gave us a shallow pullback. So this pullback can be taken as a deep pullback because it went and tapped the 50 level. Even though it was a bit, not all that, but we can say this is shallow. But as I said, shallow pullbacks in most cases they will occur when the price is strongly trending. So after that, you see price dropped strongly. Then we could also take this, if we had missed that, you come to this. This is also a deep pullback and then price dropped. So what happens next? You also put your level once you see price is beginning to pull back. So here, so far price has pulled back into the 38.0 level. It also came and tapped the 50 level, which is still a strong pullback. Are you together?
Yes.
So that is how we identify deep pullbacks versus shallow pullbacks. Even when you go on the monthly time frame, it is still the same thing. You can still identify deep pullbacks versus shallow pullbacks. You're on the monthly time frame. Let's say this is a monthly time frame, and you have your swing low here with this. Price pulls back here. This is a what? A deep pullback. Price breaks above and it goes there. Price pulls back into the 38.60. That is a what? A shallow pullback. Now, do you know that this price can still pull into this zone here? This one. Because it still has room. And according to rules of pullbacks, we want to see at least 3 green candles. So when the market is pulling back, what happens? The monthly is pulling back, the weekly, the daily, they will show you that sell, 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 sell. Now, that is it. But we can also look at others. If you look at these moves, if you observe very well, this is, if you, from the swing high to swing low, this is a strong pullback into the 78. Then if you mark this and this is also a strong pullback, but we said when price breaks above and it comes to the 78, it tells something to you as a trader. Such a market is likely to go into a consolidation. Now this, we cannot mark this because there was no break of structure. We want to see price break above. Let's say we have this as our swing high and then swing low. So we can't take this. The one we can take is when price breaks below here. Then that's when we can take the last level and this. So we now say this is our swing high here, and then this is our swing low, this one. So you come and put here like this. Price came where? 50.61. What did it do? Push lower. Now, we don't count this as a swing low. We don't count, the one we are going to count is when price comes and breaks this low. So we mark this, and also we trace where price started from. Price started from here. So that one gives us our swing high and our swing low. Then you come and put your level like this. So you wait for price. Now you see price pulled back. It closed above. It is into the 78. Now, as I told you, based on my experience, each time price goes above 61 and it comes into this, the market tends to move in some sort of a consolidation. It consolidates. It doesn't mean the market doesn't reverse, but it tells me something different. So don't get surprised to see this market pulling back, or it can even drop up to this side, or it can even push, but it finds a way of coming back to take this low here, which is this swing low. So the market finds its own path. Maybe a few years from now, you will see that price has again come back here. But for now, we see price is, because based on market structure, you see this, the whole of this, the entire move you're seeing here, this is a short-term buy. The move is where we are bearish according to the monthly time frame. Are you seeing this?
We're still within the high swing and the low swing.
So if we consider this, that means we are bearish. So anything in between here and here, we call it a short-term buy, because price can do this, it can give you this, this. It can even come and break above. But we said according to the rules, if price breaks above, we want to see it respect and continue. But if it breaks above, it doesn't close from there, then it comes, then it is respecting this level. So what do you do as a trader? You read what is taking place, because you are a retail trader. If the market says now let's look for sell, sell. So this one is a short-term buy. But it doesn't stop you from predicting and saying, okay, this is my swing low. In this short term, this is my swing high. This is a strong move. So that means price can still come here. It doesn't even come to the 50 or 60 or this and still continue up. So a situation where you have one side is selling, you buy, and another side, just like as you saw, price is pulling back, it is into the 78, and here you see price comes. So that's why price goes into some sort of a consolidation. There is indices on buy, sell, buy, sell. But the overall trend, as you see, is bearish. We are bearish. We are bearish. We have been bearish. We are making swing lows, swing lows. We have this strong sell, swing lows, swing lows, swing lows. It is not until when this market goes and breaks above, it corrects this structure, retests, then there you can say, okay, now the market has potential of continuing.
It's almost 11 years.
Yes. So it takes time. But now what you need to do is to trade off of what you're seeing. And that's why I teach you market structure, internal structure, external structure. So if this is the external structure right now, which is saying short-term bullish, you even have it marked that here, this is my short-term. Let's say you've marked this price level. this is a level your short-term buys, and because we're in short of an uptrend, and this price can still continue and continue bullish if it wants. But you mark because as long as we are in between this level and this, we are bullish. This is a monthly time frame. Anything can happen. But as I said, there are other things we look at while trading. If you go to the weekly time frame, it gives you now another picture. You find the weekly will also tell you something different. The weekly will tell you, okay, I'm in strong buys showing higher highs, higher lows, higher highs, higher lows, higher highs. Then it is telling you that I've made some short term, I've made a lower low here. And it is also telling you I'm in some sort of a downtrend. And for sure, you can see this move is, so you apply a lot of things. If you look at this, which pullback is this?
60, 61.
Pullback or shallow?
Sorry, it's a dip.
Now, has this market broken this swing low for this weekly? Let me mark it here. Has it broken it?
No. No. Do we consider that big bearish candle though?
I'm the one asking you. So this
no, it hasn't.
This candle closed well below this level. Are you seeing? There is a outside of this. The body, when I say, okay, it may not really be huge and bullish. If it was this strong bearish candle, we would just continue going down. If we had this one. But you see this body, the market has tried to push lower. Are you seeing? This is a new low. The body has closed. Are you seeing this body? So if we apply market structure here, this pullback, this is a good pullback, isn't it?
Yes.
Can we say this is a pullback? Yes, because you have 1, 2, 3 green candles. So we have this swing low here, and this which was a swing high. Then this is a pullback, price pulled here. So if we mark this and then we mark our last, can also have this. If you have this, that means price did not close above here. I see. Price did not close above this one. We have a rejection here. What is that? This is a double top. It is a reversal pattern. So we then have price push lower. We haven't broken below this level. The one I've marked here, this swing low is not yet broken. Though the market shows potential of pushing lower. But as I said, price can give you higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low. As long as we don't break below the level, we can say we are still within. So we have to wait because this is some sort of a range. We have a double top already on the weekly. We also have strong rejection candle here and a strong sell. We see weakness from the buyers, and now price is reacting on this level. So what happens? There are two things. One, We already have a lower high. We may not really consider this to be a lower low unless someone says, okay, let me consider this. But based on the weekly structure, this is the higher low, higher high, higher low. This one did not break above. I will not consider this. But even if you consider saying, okay, let me consider this, and you consider this, this tells you price is in some sort of. But as I said, your goal is not to be right. Are you getting me? Your goal is to get a clue on what the market is doing. There are a lot of things we look for. I cannot just tell you everything in just one class. There are very many because the market moves looking for where there is money. We have money on weekly highs and lows, monthly highs and lows, imbalances. So all those things I cannot just say them just in one video and I say, Shakila, this is it. So when price comes here, do this. But as I told you the other day, when you make analysis and you see the market is confusing you, leave it. After some time, it will tell you where it wants to go. So we don't want to say this is a breakout and it is not clear enough to tell you it is a breakout. But however, we can say, okay, maybe if we get good price action here, which says buy, we can wait for this market to come back into this level of this. And then we find something that tells us maybe we join the trend if the market is willing to push low. But if you have confusion, you yourself, you cannot see what is happening very well, you stay away from the market because the market is ranging on the higher time frame. The goal is not to be right. The goal is to follow your rules. This is a shallow pullback.
Okay.
Says a deep pullback. Now, to summarize this, you need to understand deep pullbacks and shallow because at times the market will not give you a clean pullback. So that means you will be left out. The market will leave you if you are waiting for. So you need to know at times when the market is strongly trending, it doesn't give those pullbacks. Because for a pullback to occur, you want to see, let's say if the market is moving in an uptrend, this market is buying, and you can indeed see this from here, it comes here, it pulls back, it moves. For this pullback to occur, this one, you need traders who entered in at this point here, those who bought to begin closing their positions. And also you need sellers to enter in and short this price. That's when a pullback will occur. But as long as there are no buyers and sellers doing that, then a pullback will not occur. I repeat, for a pullback to occur, you need to see traders opening or closing positions. If you look at this market, we were in a strong moving downtrend. If you see here, this is a strong moving downtrend. For this market to reverse, you want to see these guys closing their positions and price reversing. Then the same thing applies to a pullback. for this pullback, a pullback in most cases, it is a short-term sell in an uptrend and a short-term buy in a downtrend. So you want to see these guys close their positions for a pullback to occur. If they don't close, and if the opposite side doesn't open, then the market will continue trending. Are we together? So go to and try to identify those pullbacks, shallow pullbacks, pullbacks.
I'll do my homework.
If you enjoyed this video, leave a comment on what video topics you want us to cover next. Don't forget to give us a like, as it allows us to produce more free content on YouTube. Hit on the subscription bell to be always notified when new content is released. Thanks for watching. See you in the next video.